average of the year that Greetings, welcome to episode 13 of Optimum Live. We're going to go into a couple of different areas here. There's kind of a follow-up to the budget that we're going to do first, and that's a couple of quick workings out on, kind of linked to some extent, is the increase in the minimum wage that came out in the budget, and probably the big one to a lot of people is the national insurance increase. And we're going to have Mike Blaken's going to join me in a second, and he's going to take us through a couple of quick workings out just to make sure people understand what that's going to look like, what the impact is, and how we can cover that off, all that sort of stuff, just to make sure that everybody gets that side of things. We're then going to move on from that. It's only going to be quick. Just we're going to have it on screen. He's going to squiggle, and hopefully we can read his handwriting. And we're then going to go on to a number of VAT potential pitfalls, I think is the way I should have put it. And we're going to go through a few workings on that to make sure that people are aware of mistakes that they could make so that you don't, basically. So that's the idea. So without further ado, delighted to bring in the man himself that all the responsibility lies on now.
Back again.
It is. How you doing, Mike?
Yeah, good. Yourself?
Yeah, very good. Thank you. You've actually got to really be on top of this one today because we're going to be doing a few workings out.
Yeah, and I think a lot of people haven't realised quite what the effect of the national insurance changes are. They see it as an increase from 13.8 to 15, so not very much. But actually, it's the second one that they brought in of reducing the point of when you start paying it, which is actually having quite a large effect. And so it's sort of, we'll just go through, sort of try and look at an average firm with sort of maybe 20 staff or so, 30 staff or something like that, and just sort of see what the effects are, and just more not as a scare tactic or oh, here we are again, look at the state of it. It's more going, right, these are the things you've got to do so that when those changes come into effect next year, you're ahead of it, rather than the cost going up and going, right, now I've got to increase my sales. Is actually try and get there before there, so everything's planned and ready to go. I think that's the most important bit. These changes are in, but they're not. I can't see them retracting on them, stepping back. So let's just plan for them.
Yeah, I think the consensus that I was hearing from a few people is that, you know, we've got this black hole that needs to be sorted out one way or another, and the hope is that they will row back, but not for a couple of years, probably.
Yeah, that's it. And to be honest, you could argue that once it's been in for a couple of years, why would they go back? So, but cynical or not, at the end of the day, they got to try and put money in the pot. So this is the way they've come up with, and this is the way that at this moment in time we've got to deal with.
It's like I was remembering only the other day is that it doesn't seem 5 minutes ago that we were up in arms that fuel went over £1 a litre. What? And that's like now going, we'd love it to be that low again. But I remember it doesn't feel very long ago. And you're right, is that they'll then keep it there once everyone settles in. But equally, what I will take from that is that we also get used to it from our, cost and everything else. And it isn't insurmountable as much as it might feel like it at the moment.
Yeah, and I think you'll have a few months of people moaning about it and getting upset, and I can understand why. There's certain industries that don't have the ability to adapt as much as other businesses, so some of these costs are going to be absorbed by them, or hopefully absorbed, perhaps. So this isn't there's one way and this is how you got to get out of it. There's some industries that don't have that opportunity to straight away. So it's looking at that, and then then it'll die down a little bit. Then it'll come in again when people start paying the increased amounts. But that probably won't be till June, July next year, where people will start feeling it after a few months and stuff. And then if they haven't planned for it, then they'll start feeling the pinch on the cash flow. But with our clients, we like to get there first and see sort of what we got to do now to plan for it.
No, it makes sense. Okay, so we're going to look now, and are you going to be talking chalk straight away?
Yeah, I can drive. Yeah, that's fine.
Okay, I'm going to do something fairly different here. Is that we're bringing up another screen. We've got some branding up there as well, which
Chris just likes to show off with his new tools.
Hey, you had it first, and you showed me that I should get it. It's really good. So you're going to now, are we going to start with the minimum wage increase?
Yeah, we'll go with that. Then we'll show the effect of national insurance.
Okay.
And then we'll go from there. So if we start with, let's go with 25 staff. Okay.
Yep.
There we go. That's legible. Let's make it a bit thicker for me. All right, there we go. So 25 staff. Let's assume they work 37.5 hours a week. There we are. God, that's weird looking at that. Right, that does say 37.5 hours. Okay, that's 1,950 hours in a year.
Yep.
Okay, so if they're whether they're at minimum wage or whether they're above minimum wage, let's assume that everyone's pay goes up by this 77 pence per hour.
Yep.
Okay, so 1,950 times 77. Okay. Is £1,501.50. So that's per employee. So if you see EE, that's per employee. Okay. So we got £1,500 per staff.
Yep.
Going up just because of the minimum wage. Okay. So we times that by your 25 staff. Okay. 25 staff is, we'll keep it round numbers, £37,500 in a year. Okay. So that's quite a large increase. That's quite a lot to try and absorb. And to be honest, that's a lot to absorb, regardless what size business you are. Okay, because it's all going to be relative. If you've got more staff, there's your turnover's there, but it's still margins are still got to be affected. Okay,
Yep.
So that shows straight away. So if you think about a bar, for example, or a restaurant or something like that, wouldn't be unreasonable to have so many that many staff, 25 staff. It might be a bit of a mix of 10 part-time, 15 full-time, but you're going to have those that sort of level of staff in a bar. So you're looking at 37.5 grand increase on the wage bill for 25 full-time staff. Okay, £3 a month, just over. Okay,
but just to make sure that this is understood, that's for people that were being paid minimum wage. So if they're paying above it, there's no change.
No, but I've assumed that if someone was at £13 an hour, they would be expecting an increase because the people below at minimum wage are right. It's not always going to work like that, but at some point for these examples, you've got to have some kind of assumption. So I've just assumed whatever pay you were on, it goes up by that 77 pence. Okay, that's what this tries to do, just to show what if you went right. Okay, all the staff will put it up 77p an hour. Doesn't seem very much, 77p, right? But actually, you show the scale of this. Actually, it rolls up to be quite a big figure.
Yeah.
Okay. Then we look at the national, so that's one bit there, okay, and then we add up the national insurance, okay. So first change, okay, the rate goes from £9,100 from when you start paying it. So if someone earned over £9,100, okay, you start paying national insurance, okay. Now that rate is dropped to £5,000, okay.
Okay.
So someone earning £6,000, the company's going to pay some national insurance on that. Whereas before they didn't, because it was at £9,000 and they were below that limit.
Yes.
Okay. And this is just purely looking from the employer side of things. So the difference is £4,100, 9,000 to 5,000. That's the difference when you start paying it. Okay.
Yep.
So times by the new rate, which is 15%, times by 25 staff. Again, assuming everyone here is all, earning over this £9,000, 5,000, right? We're assuming 25k salaries.
Yeah.
Okay, in this. So £4,100 times your 15%. So that's £615 per employee extra. Okay, so we're timesing it by 25. Okay, and we get £15,000. Okay, extra national insurance because of that rate change, that threshold change. Sorry, not rate change. Okay, so we've got a big tab already. Okay, and then the rate goes from 13.8% to 15%. Okay, So this works out as, so that's a 1.2 percent increase. So we're looking at about, if you were to do that of what the existing bill was, okay, you're about 8.7% higher. Okay, I'll just write that there. That's more. Hang on, let's put that over here because that's more for me. Okay, so if we were on £25,000 salaries, okay, everyone beforehand was paying £2,000 just over of national insurance. Okay, so the increase, okay, on staff is about £190. Okay, so that we do here is increase of £190 per employee times by 25. So this one isn't very much in comparison. Okay.
Yeah.
There we are. There's that one, that one, that one. How's it looking? Can anyone read it? Yeah, no, it's not too bad, to be fair.
It's all right, mate.
So the rate from 13.8 to 15, okay, it isn't insignificant, but in comparison to the other ones, it isn't very high. The change is just less than £5 grand.
Yeah.
The biggest change on national insurance is that rate, that threshold change. Okay. So if we were to add all these up, okay, 4,750.
And while you're doing that, just to make it clear, that 4,750, it was actually like 4,772. But as you said, to keep it nice and clean, just rounding to whole numbers type thing, it just makes sense. Just in case someone sees that and goes, that's not right.
You can't
That's
add up.
deliberate. It's deliberate. It's to make it easy.
So we got 57.5 grand, okay, extra costs, right, for 25 employees, right? There is an extra £5,500 employment allowance. So
yes,
that is your first, before up to now, your first £5,000 of employers' national insurance you got for free. Okay. Now it's 10.5 grand. Okay. So we'll just take the difference off because that's all we're looking at is what the change is, not what your bill is in its entirety. So that is £52,000. Okay. Okay. £52,000 for 25 staff for a year. It's quite a lot of money.
Yeah.
Okay. Those figures are not when they've suggested in the papers and everything that businesses have got to absorb it, right? I don't think that's fair. I don't think they should be that they've got to absorb it because not many businesses have 50k lying around. They can just go, oh yeah, we'll just give that to the staff and to the HMRC. Okay. So the things have got to change. Now I've just done a written blog that will be coming out this week that kind of goes into these details about what things you could be thinking of. Okay, so you could go straight away for like putting a 7.5% pay rise, price rise on all your things, right? Yeah. Sat with a bar, we looked at that, and actually it puts the price of a pint, as much as that should be the way you should go for it. Costs go up. Let's pass it on. They can't pass it on because the price for a pint went to a point where less people would come in.
Yeah. Agreed.
So if less people come in, then each pint is contributing less in total, or in a total to the overhead. So therefore, you've got to charge more again to cover it, and you start going into the spiral of you've got one guy sat in your pint in your pub, and he isn't going to pay the bills. So what my blog talks about is that you're going to be looking at a bit of a price rise because it's going to have to be. It's going to be looking at, can you be more efficient with your scheduling for staff? Yeah. So it might be that you pull some shifts forward a little bit and stop them overlapping by like 3 hours. You might go, I might overlap by 1 hour or half an hour, or actually generally that shift is quite quiet. So I'll take one person off and cut the hours back that way.
Yeah.
And there can be some other costs you're going to have to do. It might be that you have to look at different products to bring in. It might be that you've got to look at different services to change and adapt and stuff like that. So the answer is going to be this mix of all different sources to change rather than just going straight away, right, let's put the price up.
Yeah, because I mean, that's 52,000 in a year, isn't it? So that you're looking at just over £4.25 grand.
Yep, £1,000 a week. Yeah.
Yeah, so £1,000 a week for someone with 25 employees.
Yeah,
that they need to either make more or save more.
Yeah, that's it.
Whilst keeping us productive and growing.
Right, that's it. And so I think what will tend to happen is like one of the cost cuts will be if those that aren't on minimum wage, the pay rises might not happen. Okay, because that would clear some of this increase in costs out by not doing that. Okay.
Back to my question about that's only relevant if
so the businesses that are going to suffer the most here are those ones that are paying minimum wage staff, because they have no choice but to increase the rate of pay. Now, the only way they can combat that is by producing less hours, but they can't just make sure they work less hours, not going, I'm only paying you for 6, you did 8, right? Because you get into a whole load of trouble that way. But and also the staff ain't going to do it. But it's making sure that it is being efficient on that diary. Where you might have 85% efficiency of your staff but they might be wasting time traveling around or something if you're a cleaning company. So you might be going, right, how do I cut all the wasted time that they're not working, so I'm not paying for something I've got no return on? And it's going to be all little things like that is going to be different for every business.
Yes. And just to make sure I understand that, and apologies if I'm going to make some silly mistake, you're used to enough of them from me, but if it was somebody that their staff are above minimum wage anyway, and they're not going to be able to stomach the equivalent pay rise there, it would get rid of that 37,500.
And they've still got 20 of national insurance increase on that size business.
And that's just to make sure we're putting that into perspective. That's kind of like the worst case scenario. But it could be whatever you just said the figure was there.
15 by the time you take the employer's national insurance into it. It's 15. The allowance, employment allowance. So it's 15 grand increase for this. So, but it's going to be hard for some industries where those staff are above minimum wage to sit there and go, you're not going to get anything, because at the same time we've also still got prices going up. If you've got staff in your team that are struggling and stuff, you want to be able to help them out because their costs are going up and everything. Everyone's got to be starting to look at this burden, because if pay rises can't happen, as a business and an individual, they got to look at what they're spending to be able to control that, the same as a business does. You've got to look at what your expenditure are and what can you cut, what can you curb back, what can you choose not to. And so it's going to be a bit where maybe some of this people have got to get together with their staff and say, actually, we're in this together. These costs, we can't just put it straight up automatically and cover every basis and everyone's fine. We got to do a bit of everything. You've got to cut some costs, so therefore you can absorb not taking a pay rise. We've got to pay the national insurance. We've got to do this, because if you think about it, if you're in a B2B business, if every business puts their prices up, we're going to go back to inflation again.
Yeah, absolutely.
And because everyone's going to just go, well, let's keep doing that.
Well, this is where the weird things happen, isn't it? Bank of England suddenly dropped their rate, and then all the big banks have put up their interest rates on the mortgages.
Yeah, no, I gambled, and I was like, I'll leave it a little bit on my mortgage, even though I was chatting to the financial advisor. I got it wrong.
Yeah. I mean, but that's because they are anticipating that the inflation could start going back up again.
Potentially, and one of them was that actually they've been too busy, so they put the rates up to reduce the demand of their rates, and then it maybe come back down again once they're quietened up. So there's more than just the dynamics of the economy there. It's actually their internal businesses as well.
Okay, I don't know whether there's an answer to this one, or it really is a case by case basis.
To be honest, the answer is just these are the effects, these are the big worst case scenarios. Okay, so therefore you've got 5 months until these costs come in. Right, so let's get ahead of it. Look at your business, plan your business, have a chat with us, see what we recommend or what we can see, and start just having that conversation, that sounding board, talking through stuff to go, what do we do? What if I did this? Because for industries in the leisure industry, their rates relief has been changed. So they've also got that increase to take into account of as well. So there's multiple levels of cost increases happening, and it's all these ones that have got to be looked at. And you can't just wait there and go, let's hope for the best. Actually get ahead of them and make sure that you're making the money you should be making.
Okay, I'm going to remove that from the screen now. We might do some more chalk and talk, I don't know. Thank you for taking us through that, Mike. And that makes sense, is that, you're looking at, for 25 employees is anything from 15 grand to 52 grand being the impact over the course of the year. So get ahead of the game. Speak to these guys. I'm speaking from experience as a business owner. I've recommended you guys countless times, because it's not just about being accountants, it's about business advice, and you guys are able to look at the bigger picture and see, we're living in it every single day, and we don't see the wood for the trees, whereas you can step back, and it's not doom and gloom like it feels.
No, and there's always opportunities when there's change and stuff. There's always opportunities, but again, planning, being ahead of it, not just looking backwards at your set of accounts like you used to back in the day. It's now very much looking forward and planning.
And I've just remembered another one that you said in the last episode, which was the day after the budget that we did it. If you missed episode 12, go back and catch that one. But it could also be more lines of revenue.
Yeah, that's it. Looking out
diversification,
and because you might look at it and go, well, actually, with the change of business, I can't put my prices up. I can't cut the costs. They're fixed. So what else do I do? Okay, let's have a look at another line and go, right, actually, I could generate this level of work. It might mean that you've got to work a bit harder because you've got to run a second income stream or something like that. But if that's what gets you through in that the period until things settle down again,
and that's it, getting used to a new status quo, I think is almost what I'm feeling. And it's not just diversification. I've been doing a lot with my business is that it can evolve, and you suddenly look at your business and go, well, this is what we do. Actually, that lends itself to this as well. Doing the same thing, but expanding the message that's wrapped around it.
Yeah.
And that's what it can sometimes be, is the message that's wrapped around your service. So that doesn't actually change, but what people are buying it for could change.
Absolutely. Yeah.
So yeah, that's just me speaking off the top of my head. Shoot me for that one, not him. Okay, VAT pitfalls, and I know this is one you wanted to come on to. We spoke about this a while ago, didn't we? Because there's a number of areas that people can inadvertently make mistakes with.
Yeah, that's it. And I think we did this one as our first one over 12 months ago. How things have changed.
Yes. Although we focused specifically at that point, didn't we, about registering yourself?
That's it, and how to go about it and stuff. So and I think we naturally, you're getting asked a lot of questions. What can you do here? What can you do? And it's kind of like a FAQ kind of situation. That this one keeps coming up. So let's have a chat about it and let's confuse you even more about your accounts.
Thanks, mate.
You're welcome. So we can start with the registration. So the limits, so £90,000. Now, if we're talking pitfalls, okay, the biggest thing that people don't realise is that it's not one set of accounts to the next set of accounts.
I remember that now,
yeah. See the light bulb? It all got brighter everywhere. So, and I've freaked a lot of people out, and when I've told this, because they've gone and panicked because they've just been amiss with it all and just gone.
Because it's fair to assume it's going to be that financial year, but it's not. It's in any 12-month period.
And typically, you could probably get by that if you were always under each set of accounts, then you were probably by default under the VAT limit. Okay.
Yeah.
However, if you get to the one set of accounts and you're over, what you might find is actually when that point was so far back that you got a bit of a problem. So it's on a rolling 12-month basis.
Yeah.
So that is, you look at, say, we're stood now, so we might go from November 23 to October 24.
Yeah.
What was that turnover? Okay, that's fine. Then you add on November 24, take off November 23, and it's that rolling 12 months. So what we tend to do is have a very simple spreadsheet for those clients that are getting close. We have a spreadsheet, put the month in, put 12 months, and it just adds up to 12. And it keeps going down, adding up the previous 12 months. And when it goes over 90 or it's getting close, the idea of that is you can also go, right, actually, how much do I need to put in next month? If I do, I know I'm going to do 10 grand next month. Actually, what does that do? Okay, I'm going over the VAT limit. Therefore, I'll start having a chat with Mike again now because we're going to get VAT registered.
Yes.
Right? We get ready. Rather than it being something where you come, what would happen is those ones who aren't ahead of the game will come in and we'll do the set of accounts and go, oh, your accounts are over. We need to talk about that. Then you look back and go, it was June last year. Now actually they've got 12 months of VAT stuff to go through, right? That's your problem. That's the pitfall, is that you're not aware of it and you cause that. Now we talk to our clients as much as we possibly can to say, look, be aware of this. Those ones that are coming up, we know the new startups, so they might grow quickly. So you might not, if they're doing it on a year by year basis, they're talking to us. You can't rely on that because those startups might go from 10 grand one year to 100 grand next year because they hit the curve, right? So we've got to try and impart that knowledge into them to be aware of it. Just touch points again. It's a little bit why I want to talk about it so that people are kind of aware. It's like bumbling in the background and they'll get a feeling and go, I'm getting near, and they pick up the phone, right? And that creates a touch point as well for us. right, we got ones that we're on all the time with them. We're doing monthly stuff. We're chatting with them. We'll be reporting backwards. Okay. But those ones are typically over the VAT threshold anyway.
Yes.
Okay. So it's just trying to get that point where they know to come to us and talk to us as well. So yeah, that's the big bit there. It's just being aware of it beforehand rather than going back. We talked before, and there's on our first episode we talked about what the problems it causes if you got to go back. So we won't go into that.
Are they any quicker yet?
Yeah, they are quicker getting the VAT numbers out, much quicker. Yeah,
because that was a real problem when we did
that
episode one.
It was. Yeah, they were really slow, and they extended the duration to get it out and that. Whereas they're a lot quicker now. So they got their ducks in a row now.
That's good. Good. Okay. Anything else on that VAT registering?
No, not really. It's just
to avoid the whole episode.
Yeah, just watch that rolling 12 months.
Yeah. Absolutely. And it's 90,000 revenue
money in from customers. Okay.
Yeah.
Whether they're paying for your labor, whether they're paying for something that you've recharged out, like an expense, so some people think, well, actually, that £5,000 they gave me was £1,000 for the subbies wages or something like that. So I will only count for the £4,000 for me. No. Just treat it as what money came in from customers.
Yeah.
And that done it. You also got to think if a customer pays for something on your behalf, although that hasn't come into your bank account, it's gone across there. Actually, by law, it's come into your bank account and it's gone out to the supplier. Okay, so that's where some people might think they're being a little bit clever, going, "Oh, we'll cut the corner out." Okay, and that means it's not coming through my bank account. Well, no, it's most likely it's still on your behalf. So that's a pitfall for you, or trapdoor to walk into. You think you've got it okay, but actually not really. So it's money coming in. Treat it as money coming through to you from customers. Doesn't include loans, doesn't include money you put in as directors or something like that. It's just money coming in from customers.
Fine.
Doesn't include rebates from suppliers or refunds or anything like that. It's literally money from customers.
Fine, that makes sense. Next point then, VAT pitfall. We've got flat rate charge.
Yep.
Discuss, what is that first of all?
So you can register for VAT and go on to the simplified flat rate scheme. Okay. So instead of totaling up all the VAT you paid on expenses, all the VAT your customers have paid you, net the two off, give the taxman the difference.
Yeah.
You can just go with the customer paid me this much, I'll apply a percentage to that and pay him that. So you don't have to worry about calculating all the VAT on your expenses and stuff like that. Okay. Really, really popular years gone by. But what they changed many years ago was that there's something called a limited cost trader. Okay. Which means if you spend very little on expenses, and even like, you aren't allowed to have so you might say £12,000 invoice, 10,000 plus VAT. Okay, so there's £2,000 of VAT, but your percentage, depending on your industry, might be only 14%. Okay, so 14% of the gross amount is 1,680. Okay, so the flat rate's telling you got to pay the taxman 1,680, but actually you collected £2,000 VAT. From the customer.
Yeah.
So you make a bit of a profit. Okay. The idea is that bit of profit there is to cover the VAT that you didn't claim on your expenses.
Yeah.
And it nets off and it all comes out in the washing machine. It's all good. Right. But a lot of businesses at one point were going on this percentage, 11, 12, 13, but they have very little costs. Right. So HMRC were realizing they were just handing money out for the sake of it. And it was very simple. So every client was doing it on like contractors and stuff like that. Whereas now, if you don't spend over £2,000 typically, or 2% of your turnover on goods, so that's not us as accountancy, that's not on motor expenses, it's on goods.
Yeah.
And that's not assets, that's goods for resale. So like a builder, if he buys bricks and sells it, that's a good. A IT guy or an accountant buying his own laptop is different, because that's not as a good. Okay. So that cut most people out of the market, because actually £2,000 for these industries that are selling time, typically, or on the VAT rate, didn't get the advantage. But it's something to be aware of, because sometimes there is an advantage. It might be like, say, a takeaway shop or something like that. They could just go, right, actually, we'll just take the total of money coming in, do the percentage, and I don't have to worry about all the rest of it at this moment in time. We just do that at the year end. Okay. So it's more just to be, there is that. But if you do think of the flat rate looks good, you've got to remember the limited cost trader rule.
Fine. I mean, is it still attractive? Because I mean, these account systems, make tax digital and all of that means that it works all of that out.
That's it. And I think there's less people doing it because of that. But I've still got one client, although we've showed her that actually it's more beneficial not to be on it. For the pure simple, we know where we stand with it because we know what VAT is, because the money's coming in off every sale. We're moving it to one side. We know exactly what it is. We can't get into trouble. We might be spending a little bit more, but it's less hassle, right? For their personal circumstances, sometimes there's no point going, you could say tax on this and this, because if it's not right for the personality, and if they're happy and they understand what we said and explained it, then it's what they choose to do.
Yeah.
It's no different to someone going to buy a Tesla or a Fiat 500 electric, right? One might be better than the other to someone, but it might work. It's just different personal circumstances of what they prefer.
Fair enough. Okay. Next one, construction reverse charge.
Yep. So as standard, when you get VAT registered, you charge 20% on everything.
Yeah.
Okay. Unless you fall into all the different categories. Okay. So the default is 20% and you come all up. Now, years ago, 4, 5, 3.
Anymore?
It was after lockdown. So let's go 3. Okay. They changed it in the construction industry that if you were business to business, you didn't charge VAT, rather than always charging VAT on everything, unless it was a new build, because they were 0 rated. So if you build a new house, you never charge VAT on it. Okay. But everything else was 20%, right? And then they changed it and go, no, builder to builder, you don't charge VAT.
Okay.
Physically charge it. Okay. And then you get to the end, and when they invoice Mr. and Mrs. Smith, they charge VAT. Okay. And if you think about it, it's HMRC are in the right position, because the first person would charge it, collect it from the customer, okay, and pay it to HMRC. Then the next builder up would claim that back off their next return because they paid this company VAT, and then they would add up how much they charge the next company, but they all add up together to be the same thing. Right. So you think, well, why change it? What was happening is the ones at the bottom were not necessarily VAT registered, or were not necessarily, there were too many of them for them to keep an eye on. So every time HMRC paid out money to these companies, like up the chain, because they had a valid VAT invoice, HMRC were only ever out of pocket, because they were giving money out hoping that the ones at the bottom would give it back in. Right. And that cycle going round. So what they decided is, like, actually, let's cut it all out, because at that point they could never be more than square. HMRC, they were always, the risk was, if one of them went bust, they were behind for VAT, because these ones had claimed it, these ones had lost it elsewhere. So that's why they brought it in, is that business to business is reverse charge. Okay. Essentially, there's something that happens in the background that adds it and takes it off when you get to your invoicing, but we don't need to worry about that, because let's just understand the fundamentals of, you don't physically charge it. There's certain areas that seem to fall in the grey and make it a bit complicated, whether you're hiring stuff out, like scaffolding and bits like that. But again, if you're in those areas, you already know you're in it. Right? It's those new businesses that are coming in. But everyone's now got up to speed in those accounts departments that kick back and go, no, take the VAT off of that one. We need to change it. But it's more being aware of it. Again, it's just one of those things. If you're aware of it and you're going into that industry, then you have a conversation with us and we'll talk through the details. But if we don't make you aware of it, what you don't know, and then you bumble off on down the path.
I mean, apologies again if I'm about to take this in a stupid direction, but this reverse charge thing, I noticed that I had a couple of invoices from, I was going to say Microsoft, but I don't think it was them.
Ones that Microsoft and Adobe do it and stuff. And so that's the electronic services.
And I've got that as a setting in my accounts package that I just happened to notice, thankfully. I think John Lacey told me, watch out, that one's got this. And then another one that I noticed, and you're right, Adobe was one of them, and it said at the bottom, it is reverse charge. So I have then got this reverse charge VAT in the VAT box, which then does nothing.
Adds it and takes it off. In your example, in your business and stuff, and that'll be that. And the construction one is that, but it just ever so slightly different. It ticks a different box, but it does the same thing. Okay. And it's all about now I won't get the technical wording right on this, but so for your business you won't notice a difference. It adds it on and takes it off, right? But for some businesses, they can't claim all their VAT back.
Right.
So you add it on, but you might add on £10, but you might only be able to claim £6 of it back.
Okay.
And so then HMRC add it on. So those businesses need to be aware of doing that right. But fundamentally, if you put 0 rated instead of reverse charge, the end result of what would go in HMRC's pocket would be correct.
Fine.
The VAT return basis would just be ever so slightly out. Okay. But the end result, the most important bit, I would say, and there'll be other people, experts, that will argue against me, but the amount that go to HMRC is correct. That's for me, that's the most important bit.
Yeah.
The other bits are secondary. Okay. In my view.
Yeah.
In my view, but the numbers have got to be right because the return's got to be correct and stuff. And that's the difference.
So that's not really a pitfall. Is that if I happen to completely forget that it's a reverse charge and I just put it as 0 because I've not paid any VAT, I'm not suddenly about to get knocked on the door.
No, because of your circumstances, you're fully able to claim all your VAT back.
Yeah.
There's something called partial exemption, which means some of those businesses might not be able to claim it all back. Those ones need to be very hot on making sure it goes into the right pot, because HMRC will be able to sit in.
But presumably, if you were working with a business that was in that bracket, you'd be all over them anyway and making sure, whereas we've not had to have much of a conversation because actually, look, worst case scenario, you put it as 0, it's still the same figure.
Yeah.
It's fine.
Yeah, that's it.
Yeah. Fine. That's okay. Sorry, I took that in a slight bit off, but it was related there.
Yep.
Travel expenses and reimbursements.
Do you want to turn the lights off so you can see the real effect of what the light bulb moment is going to be? Yeah, I'm sure of it, because I get it with so many times with clients.
Do you need to chalk and talk?
No, it's okay. So think of I reckon this is, I'm worried that it's going to come wrong. Okay, so if you're doing it differently, cover it up. Don't say it. We'll fix it in the back. No, so typically contractors and stuff, they'll invoice for time, and then they're able to add on expenses to their invoice. Okay, so they might spend £8,000. Yeah, I'll get you over the VAT limit. £8,000 of services like labour, and then expenses of £500, right? But say on those expenses, you didn't claim any VAT back or anything, like because they were 0 rated or something like that. Flights is one that's typical. Right?
Okay.
People put it on and they just put it as like a reimbursement, like an employee would if they went to their employer. They would go with an expense claim and get reimbursed. Okay. Yeah. They're not charging VAT between them or anything like that. The employee doesn't come VAT registered or not, right? But these contractors, they kind of do the same approach. They go, well, here's £8,000 plus these expenses, and I won't charge the VAT on the expenses because it was a flight and there's no VAT on flights and stuff. However, you can look at this on if you get bored, look on the HMRC manual. Okay, because your main supply to that customer is a VATable service, is your time. Everything else comes along with it, with VAT. Yeah. So you end up charging VAT on flights and stuff, which seems really weird because typically a flight is 0 rated. Yeah. But that's because all the expenses get added on. Now, for a lot of businesses, they won't really care. They're VAT registered, they claim it back, it's all good. But if you start working for certain industries that aren't VAT registered, so say you were doing something for a care, or you were doing something for a part of a school which wasn't VAT registered, and you got those bits, actually all of a sudden you're creating your expenses to be 20% more because of the way it happens. So a lot of people will default to not charging VAT on it, but actually they're doing it wrong.
Okay. And I think that I learned that because I remember that I was having to, as part of an invoice, there was the expenses, and I remember doing it and going, what am I supposed to, is there supposed to be VAT? And I happened to look online, and sure enough, so I didn't even have to trouble you guys with that when I went and looked, and it's like, no, there is VAT on those expenses, like the pence per mile or something like that.
Yeah,
it's
because
like,
it's all connected to that main service that's going on. And that one does catch people out because there's like, well, it's not, but they keep, I think it's these ones that fall into that. Are you an employee? Are you a contractor? Right. But they're a bit of both. And there's obviously consequential taxes if you're in one or the other. But at this point in time, like they feel, oh, sorry, well, you wouldn't, it's just, I'll just pass it on. They just reimburse me. That's all that is. I'm not making any money on it. So it's not that.
And that was my original thought when I started, but I went, I better check. So thankfully, I did happen to check.
It. So what I had that with a client, and there was a massive light bulb moment. It was like, okay, we need to revisit this. And his was affected because there was different areas that he was invoicing that had different VAT amounts, whether he was doing a VAT because it's certain teaching could be exempt. And you've got all these different bits that fall off the back. So it is, you can fall down. And they try to say that VAT is the simple tax. Okay, simple tax has got a manual about this big.
Yeah, exactly. Exactly. There's now simple about it. Finally, vehicles in limited companies. So VAT with regards to vehicles in limited companies.
So what's common at the moment is electric cars in companies. Okay, we talked before, real good tax savings, especially if you were paying for a lease personally as well beforehand. So you can flip that money that's coming out post corporation tax, post dividend tax to pay for a car, and pay for it as a pre-tax deduction in the company. So a lot of people move into electric cars, right? We talked before about that. But a lot of them are doing them on a lease, 2-3 year lease, because they don't want to be left with a dud of an electric car in 3 years because the technology's shot on. Okay, so I would say most clients we've got, they've just gone straight for a lease because they think 3 years time, 4 years, we'll just chip it back and get a new one, right? Until the market starts leveling out a bit, if it does. So those leases are all got VAT on them. Okay, so it'll be £600 plus VAT. So as a business owner, if I gave you that, right, and you saw £120 of VAT on it, you'll want to claim that £120 of VAT because you're VAT registered. Common, most people want to do that. Okay, but actually, if that car you use personally, okay, even a sort of small amount, you can only get half the VAT back. So say it's £600, it'd be you would only claim, instead of £120 of VAT, you would only claim £60 of VAT back each month.
Wow.
But you got an invoice there that's staring you in the face going, I've got £120 on this. But actually, when you got private use on it, then, so if you had a pool car that was in the office and the staff just drove it off to a client, came back, drove it off, right? That's purely business, okay? So you can claim all the VAT back. That's a pool car, no personal use, not available personal use, no problems, nothing there, right? But let's face it, any owner who's got an electric car, he's driving it home.
Absolutely,
right? So you can only get half the VAT back.
How do you, I mean, that's staggering. I did not know that. For an area that I was potentially going to start looking into next year or something like that myself. How does that get done within my accounting package then?
So, instead of just having one line at the expense, okay, you have two. You have one area that's at so £300. You would have £300 at 20%, £300 at zero rate. So the right amounts go in the right box and the right VAT goes in box 4.
Blimey. Okay.
But again, quite often I got 20% VAT on it. I'm claiming that VAT back, but it gets blocked.
Because that would be an autopilot, wouldn't it? I've got an invoice that is that plus 20% VAT.
Yeah.
That's what will go in my account package.
Yeah.
Because it's not, at that point, you're not there actively claiming it back, are you? You're just entering it into your account system. Goes, it's £600 plus 20% VAT.
You go on, put the bill on, attach the bill. Yeah, it's all good. Yeah. But again, little trap door there.
Wow. Okay.
But if you have a maintenance package, so you have the lease car and then say you pay £100 a month maintenance, and have all the VAT on the maintenance.
So you'd have to make sure you separate.
So you'd have to separate it to go.
What if that they just provide an invoice with a total figure that includes the maintenance package?
Then you that essentially like your expense, it all gets bundled in. That's your lease cost. But most of these companies will split it out because they're probably on their different commissions, different systems on their side.
And if they don't, we should ask for it because there's
that difference of that. Yeah.
As you say, the simple tax.
And that's it. There's so many different things. So again, we seem to have got to the end of our list. So I'll have a couple on because they've come to mind. Is that so? Again, just doing a blog at the moment, ready for the old Christmas.
Which is why, by the way, I did put this up. Is marketing@optps.co.uk gets you on the mailing list.
Yeah.
So drop a line to that.
If you go on our website into the news and updates section. We've got all our blogs go online as well, so they're all just sat on there. You can go and have a read through, and you can do that as well. So, so we put them on there, and this one's about gifting for Christmas. It's coming up quicker than we realised.
We did an episode on that last year.
Yeah, we did in the midst of a glass of cider.
We did.
Yeah. So on VAT there, Okay, so say you have suppliers who come along to the Christmas do with your staff.
Yep.
Okay, so you might say you get charged £100 per head. Okay, you got 10 employees, 5 staff. Okay, plus the VAT, £100 plus the VAT. You can't claim the VAT back on the suppliers because you're providing entertainment, but you can claim the VAT back on your staff.
Right. Oh gosh. Okay. So let me get that right again. So we've got 10 staff.
Yeah.
5 suppliers.
Yeah, who come along to your Christmas do.
Yeah.
And you get charged £100 plus VAT per head.
Yeah.
You would claim the VAT back on the staff
On the
bit,
staff.
but not on the supplier bit, because
so that being as a zero.
And again, you wouldn't get corporation tax relief on your supplier entertainment proportion.
Yeah.
Again, there's little ways you might be able to work a couple that might come through if they're guests of the staff and that would bring partners or bit. That gets into the complicated bit. But typically, entertainment for clients is no VAT. So on zero, you've got 2 categories: entertainment,
100%,
0%, 100%, right? So what that is misleading, because you go, well, actually, it was all for business. If it wasn't, it'll be my direct loan account, or drawings. But it's trying to distinguish what's like 100% allowable, what's not allowable for tax. So if you took me out for a pint, okay, typically that would be entertainment. That wouldn't be allowable for tax relief. Yeah. But if you took Tom out for a pint, okay, and you were doing like staff, that would be more staff entertainment. That would be okay. Right?
So that would go as 100%. But we've got a limit of how much of that we can do.
Correct. Yeah. So it's that's the differences there with the VAT again. So HMRC accepts that in business you're going to do some entertaining. Some businesses absolutely depend on taking out people. So like if you think of your salespeople, they're taking out people for a meal to talk about what they're going to do, how many windows they're going to sell them. Do you want to have this brochure? We got this line of stuff, right? They're going to take him out because that's just industry. So HMRC allow you to do it, but they don't allow you to have the VAT back and the tax back. It just goes in the expense line.
Yeah.
Okay. So it's that difference of HMRC going, yeah, we know you've got to do it, but we're not happy of you taking them to the Ritz for every meal. And stuff like
absolutely.
That. So if you do, that's fine, but it's not going to come off. You're not going to get the VAT and the tax back.
Got you.
Whereas staff, they go, nope, staff, fine. Look after your staff. It's all good. And just keep and you can have all that through as an expense, tax deductible, VAT claimable.
Because I think this might have been the advice that was given by you guys, is I kind of put everything as 0% to be safe in zero, and then we look at it at the end of the year.
Yeah, and just analyze it and just talk it through. What was this? What was that? And now there's certain times where, again, I might have a different view to another, but we might go into a coffee shop, but we'll talk accounts. Okay, and we're actually doing your accounts, where it's a business meeting, but we happen to be getting a coffee. Yeah, no different to if we were sat here. I'd get a coffee out of our coffee machine. Yeah. We go there. So, what is the main purpose of the meeting? Is the main purpose of the meeting to smooth you in a situation, or is it actually we're talking accounts? So, I took a client out once. We couldn't get our diaries to match, and there was one point where it was 7 o'clock in the evening. I said, "I'll tell you what, let's go out. Let's grab a pizza, and I'll go through all your accounts." Right?
Yep.
He did 6 of his company accounts. We had a pizza, right? We didn't go out because it was food. We weren't going out because of the main thing. The main thing was go through all these accounts.
Absolutely.
Okay. So for me, that's not entertaining. Okay. But it's very much, there's a gray line. Okay. You got, if HMRC wanted to, they would come along and if they wanted to see what these bits were, right? Why have you said that's okay? Well, this is why, because if you see here, I was out with a client, we did these accounts, I've done this. It was a business meeting. It wasn't a entertainment. It wasn't a treat day or anything like that. It just happened. This is how it was.
So what would that go down as?
I would say that would be 100% allowable in that case. Right. So I'll be okay with that. Right. Other people might say, no, absolutely, you took a client out. That is absolutely zero. But I kind of look at what is the main purpose of that meeting? And what were you doing?
You were doing work.
Yeah. And if we just went to the pub over the road now after this, right? There's no work. We might talk work, but it wasn't the main reason of going for it. I was going over there for a pint
entertainment, 0%.
Yeah.
What about? And I'm conscious we're going to wrap this up in a second. And if you've got any questions, please do. You can put comments in, but if you want to be safer after this live broadcast, is drop a line. And I'm going to drop you in it, Mike, because I'm going to put yours up. mblaken@optps.co.uk. Drop a line, any questions, come through to them. But I always have this one that intrigues me, is that I go to a conference, let's say, for example, that is over a full day, and I stay one night or both nights either side of it or whatever. We go out to dinner and we have some drinks. What is that? I'm up there because of this conference, and I've got to eat. Maybe don't have to have the drinks. So I've kind of got this conflict that goes, well, I'm up here, so the company's funding that I'm having dinner, but it didn't need to fund that I was going to have a couple of drinks.
I think I know which event you're talking about.
Yes, that's one of them.
Because it's just come up, hasn't
it has, and I'm booked already.
So, like, when you go there, what they're putting on is a conference.
Yeah.
There is information. It's learning about your business. It's developing your business. So that's a workplace thing.
Yeah.
And it's far away. So because the place, the venue it is far away, like the accommodation you're getting is because of that, because of the distance and stuff to travel there. Okay, so again, hotel will be fine. You could some might argue that maybe the second night, maybe it isn't, because actually that's more of an entertainment bit for you, possibly, right? Yeah. But depending on circumstance, you might be, well, we'll do this and this, and then we'll stay. So, and then food while you're up there, because you're in a temporary workplace then. Yeah. So food on the go. Okay, you could argue different lengths of time, or whether you get the allowances and stuff like that. Yeah. There's even a flat rate allowance if from working away from home in the UK of £5 a night you can claim, and it was to cover being able to phone home to the family. And really, £10 for abroad, right? And those little allowances are still there. Okay. Would I say all the drinks for the evening? Probably not. I would say that's going to go into the entertainment box, because zero. Yeah, because like the whole purpose of that is not. It's with your business connections and stuff like that, but it's not the business isn't benefiting like directly. There's not a business purpose.
Well, with the dinner, go with that as an example. The sustenance, would that go as expenses, or would it go entertainment 100%?
Probably subsistence, and that put in there for that one, where it's that like say your lunch during the day and stuff like that, that would be going into that box there.
Okay, because I've made the mistake in the past that I've gone, but it was entertaining that we were having dinner as well, because it would be several business owners together that were all at this venue, and so we would sort of like go, right, well, we've got to eat anyway, let's go together and setting the world to right and all of that sort of stuff.
That's it. And so it's the same as your networking. You go out and you do a bit of networking. What you're there for? I'm there for business, so we're doing that.
Yes.
You might be that when I get the drinks for like somebody else, well, that's not really business, that bit there, but the one for me might have been. And again, you can get really sort of hepped up over the real tiny bits of it. And a lot of people just go, well, let's just go safe and just put it as entertainment. I'm not going to have an argument with HMRC. I don't need to, don't want to. And what does it save? You put £1,000 through, it might save you 200 quid, 100 quid of tax.
Right. Okay.
Right. So when you look at it and you go, well, do you know what? It's not worth the hassle. Let's just play safe. Let's keep our lives easy. And not be sat there going, right, I got all these ones, right? What did you do on this day? What was that about? What was this one?
No one wants to do it.
Then start going through your diary and then start finding all other stuff in there.
No, it makes sense. Okay. Was there another one that you wanted to touch on? Because you said you thought of a couple.
What else? So property. Let's go with that one. This is quite a good one. That's coming up a lot at the moment. So properties.
Yep.
Okay. So VAT registered. Okay. And you've got a property and you rent it out. Okay.
Yep.
So a lot of people default, because they're VAT registered and they've got a property, they'll charge VAT on it. But rent defaults to not being, it's called exempt, not charging VAT on it. Okay. Unless you love that bit.
It's gonna be one.
Unless you're opted to tax. Okay. And to opt to tax is you go to HMRC and say, this building or this floor, if you've got like a block of office build levels on, like block.
Yeah.
I'm saying flats, but I can't say flats because
it's multi-level office.
Yeah, there we go. Right. And you go, right, level 2 is VAT, opted to tax. Yeah. Right. Then you have to charge VAT on it. Okay. Why the difference? Okay. So if you didn't and you go and refurb it and it wasn't opted to tax, you couldn't claim the VAT back on all the refurb expenses, because those expenses are directly applicable to a exempt supply.
Yeah.
So the same as a bank, mortgage provider, financial advisor, they provide exempt services. Okay. So they can't claim any VAT back because their end result is exempt.
Yeah.
Different to a new build. Okay.
Yeah.
Which sell a 0 rated supply. they can claim all the expenses back because their services they charge is at 0% rather than exempt.
Yeah.
So, so the property bit is one thing that catches people out, and then there's different rules for when you're transferring one business to the next. You buy one, did you opt it? Did you carry on? So that there, if you've got property and you've got VAT, okay, I can't really sum off anything that makes people feel yes, we'll definitely do this, right? But all I'll say is if you've got a property and it's got VAT or your VAT, just have a conversation. That is the biggest thing to do. We've got a few at the moment where they're trying to buy some. One part might be able to get VAT, other part might not be, depending on the circumstances. And you have to look at a specific case because it relates to the trade of the business. It relates to the building and everything like that. And if you get it wrong, you're not buying a building for a fiver. Okay, might be a couple hundred grand. There's 40 grand of VAT that you might be able to claim. You might not be you shouldn't be charged in certain circumstances. You might not be able to claim all this. Like, it's big numbers, right? If HMRC come down the line in a couple of years' time and go, you claim 40 grand back, or you didn't charge it on there, they'll go on the VAT. Here's a penalty. Here's the interest, right? It's big numbers. It could end businesses if it's done in the wrong way. So my plain thing to say is, if you've got VAT on a building, you're looking to buy a building or something like that, let's have a chat.
Yeah.
Just talk it through and we'll sound it out. And then we'll go, yeah, you haven't got a problem there. Just carry on as normal. This one, yeah, we actually got some paperwork we've got to do here. We've got to look at something. Final
question then for you with this variety of things that we've touched on here is, if I make a mistake partway through the year, or I have made a mistake partway through the year, is it visible at the end of year accounts and I was going to say recoverable, but as in correctable, I guess is the word I'm looking for.
We, as part of the accounts process, we check a lot.
Yeah.
Okay. We can't check every transaction.
No,
because it's just not possible to do that level. And if you do, we'll do the VAT returns for you.
Yeah.
Because we'll check every transaction going through there. But typically we can check wholesale things, especially with the Xero and QuickBooks, okay? Because you can get a whole category and go, right, all these ones in this category, right? Oh, you charged VAT on 11 of these, but you forgot one, or you claimed 11, forgot one,
yeah,
or you claimed it on one and not the others because one actually accidentally slipped through.
Yeah.
Okay. So we can adjust, we can spot, we can do things. If you're essentially, if it's less than £10,000 of VAT error, you can adjust it on your next VAT return.
Okay.
If it's bigger than £10,000, or there's a percentage of your turnover that I can't think off the top of my head, but if it's over £10,000, then you have to go to HMRC and say, find a mistake, here's this, and you kind of explain what happened, and they do a separate bill for it to do it. But below that, they're not worried about it. They just go, just get it on the next VAT return and just show that it's been fixed. And again, in Xero and QuickBooks, it will do that for you, because you go in, you change the transaction VAT, even if the VAT return's been filed, it pulls it through onto the next one.
Yes.
It does that all automatically. So you don't have to be aware, did it go back on or not? You make the change, it's done. So again, part of the accounts process, once we sat down with you.
So I can go back to that line from 6 months ago and go, correct that should have been that VAT. That will follow through.
It will push you on the next return. Wow. And it's also got the audit trail that if you go, well, I'm sure I changed that before, you can actually look into it and go, who changed it? Did it get changed back? Why? And you can add some notes to the transaction between us and you if we were doing it. So yeah.
Okay, cool. Be aware of it. If in doubt, shout.
Yeah.
Hey, see what I did there? And that, relax though, is that if there's some mistakes that are made with, this simple tax, that it is recoverable afterwards as well, but don't let it keep going, because that recover could be costly.
Yeah, and I think that one just slightly quickly is that the adverts with these softwares for QuickBooks and Xero, they put out this image that is so simple. You can sit in your van once you've done your boiler service, do your invoice on your phone, and that's your accounting done. It's so simple. Anyone can do it, okay? You're right. Anyone can do it if they know what they're doing.
Yes, yeah.
All right. So we've had so many come in and go, it's all right, I do all my VAT myself. I'm really good at it. I'm all fine. You're like, okay, that's fine. Great. I'm glad you're confident with it. And then you start looking at it and going, oh, that doesn't match there. That's there. So I think those people need to just listen if we spot something to go, okay, thanks for that, I'll change it. But generally,
from now on,
generally, if they're coming in and they're not wanting to listen, we won't look after them, because it's a two-way thing. A conversation with Optimum. We work with people who want to listen. We'll listen to you. and we'll get a conversation going in a relationship. So, but it is those softwares do cause a little. You listen to the bookkeepers upstairs, and they're like, "I wish those adverts would stop because it keeps making it like it's
complacency." I think,
yeah, because it's so simple. Because you're just like, yeah, click, 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 but actually, there's so much happening in the background that nobody realizes where it's all going.
And I find that the app version of them is not as
it's even more simplified.
And yet it really shouldn't be, because I've had times that I'm even there going, okay, it's intuitive enough to know that it's that is happening monthly, but I'm going, has that charged VAT or not? And it won't show me in the app, but on the software on the laptop I can see a lot more. So be careful about that. It is great, but when you know how, and still have oversight as well. I think that covers everything, mate. I think it does. Thank you very much for that. Really, really useful. As always, you know that I learn from these whilst we're doing it as well. Ding, the light bulb comes on multiple times. I hope that's been useful for you all, whether you're watching back, whether you've watched live. Any questions, as I say, drop the team a line and they'll be able to answer your questions. Next month, either we're doing a conveyancing-based one. We are doing that, are we? We're not doing like a fun Christmassy one or anything like that.
We're accountants. We're not
bar humbug and all that.
Rob's got his hat and jumper ready, but no, we're gonna go through sort of the conveyancing process and bits and understand that,
including what is conveyancing. And I love that point, is the fact that I couldn't answer that right now. I know it sits there and I know it's involved with property. But if someone said they'd describe what it actually is.
I didn't. When I bought my first house and they said you need to go conveyance, and what do you mean? I just want to buy it.
Exactly.
So there is definitely that, and we'll talk through the process, understand what you knew, but also what you can do beforehand to help the process out. Because whether you organise or not, it does become one of the most stressful things, because you just want to get on with it. You're buying the biggest thing you'll ever buy in your life, typically. A lot of money, your savings that you might have had, your inheritance. So we want to get in to show how we help to bring that stress level down.
Fantastic. Cool. All right. Well, thank you very much for joining us, and we will see you next month. I should have made a note. I've forgotten what date it is, but we'll let you all know when we're going with that. And I know we got Ian coming on and somebody else. I forget.
Hopefully Tyro's going to be on as well.
Right. Okay. So we shall see you there for that episode. But I hope it's been useful today. Now you can go and cure that headache. Catch you next time.